All right, let's dive into talk tickers. BlackRock just dropped its fourth quarter 2025 earnings, and wow, the results sent a clear, powerful message to the market. We're going to break down what just happened and what it really means for the year ahead. That message really starts with this number, $14.04 trillion. Just let that sink in for a second. That's the mountain of assets BlackRock is now managing. To put that into perspective, it's more than the GDP of most countries on Earth. So yeah, this isn't just a new record. It's a massive statement of scale. It's why every single move they make matters so much. Okay, so how did those numbers actually stack up against what Wall Street was expecting? Well, let me tell you, this wasn't just a narrow beat. No way. This was a clean, totally decisive win that suggests BlackRock is really picking up speed as we head into the new year. Looking at the two numbers everyone watches, you can see right here just how good the speed was. Adjusted earnings per share came in at $13.16, absolutely crushing the consensus estimate by nearly 8%. And on the top line, revenue hit $7 billion, almost 5% higher than expected. I mean, that's just a powerful performance on both fronts. But hey, the good news didn't stop there, not even close. The engine of the business, the part that brings in new money, was firing on all cylinders. They pulled in a massive $342 billion in new client money just this quarter, and management immediately put that strength to work, rewarding shareholders with a 10% dividend hike and a bigger share buyback plan. So this begs the question, right? Where is all this growth coming from? Is it just the stock market going up? Well, on the call, management made it super clear that their strategy is much bigger than that. They're building a growth flywheel with several powerful engines all working together. So this slide lays it out perfectly. There are three strategic pillars, and you can see how they all feed into each other. First, they're aggressively expanding into alternatives like private credit. Second, they're leveraging their incredible Aladdin technology platform to analyze it all. And third, they're using their massive global reach to sell these newer, more profitable products to clients all over the world. And this wasn't just some high-level theory. CEO Larry Fink gave a really specific example. They plan to start including private market investments directly in their standard retirement funds. Now, this is a huge deal. It means bringing investments that were once only for the super wealthy to millions of everyday people saving for retirement. And to put a number on that ambition, management is targeting $400 billion in new private market assets by 2030. You can see this isn't just a side project for them, it's a core strategy designed to bring in higher fees and drive more profitable growth for years to come. Okay, let's shift gears and talk about the analyst Q&A session. This is where we learn what's really on the minds of investors. And two themes really stood out this time, highlighting both a major opportunity and a potential risk. First, on private credit risk. Management's take was that seeing rising defaults isn't a sign of a crisis, but rather a healthy return to normal after years of unusually low rates. Second, they highlighted what they're calling the Great Rotation, a generational opportunity to capture trillions of dollars as it moves out of cash and back into bonds, which is a huge tailwind for their business. So that's the story from the earnings call. But how did the market react to all this? Well, the price action on the stock tells a very clear story. Investors were impressed. This chart right here really tells the story. See the bar on the right? Options traders were betting on about a 4.4% move. But now, look at the bar on the left. The stock actually rallied 5.9%. That gap between expectation and reality is the very definition of an upside surprise. And to put this in context, you can see BlackRock's performance has been really solid over the last year. Its total return has held its own against both the broader market and the financial sector, providing a strong foundation as it moves into 2026. This brings us to our final segment, the next call. Based on this quarter, what is our forward-looking thesis on BlackRock? So, with all that in mind, it comes down to the final and most important question. What's the call on BlackRock from here? Our positive view is based on several key catalysts all lining up. We expect their organic growth to continue, while their push into private markets and tech should expand profit margins. On top of that, they're just perfectly positioned to benefit from two massive trends, the rotation of cash into bonds and long-term themes like AI infrastructure. So when you put it all together, our official rating on BlackRock is outperform. And just to be super clear, an outperform rating means we expect the stock to deliver a total return greater than that of the S&P 500 over the next 12 months. The combination of these cyclical tailwinds and their structural growth drivers really supports this view. So that's our take on BlackRock's latest quarter. And as always, please remember, this is not financial advice. Thanks for watching Talk Tickers.